I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Hi, I'm JB. I just had to make this video, you know? It has long been an irritating problem for me that so-called experts in the financial world keep talking out of their ass. The reason why it irritates me so much is that a lot of people really believe what these talking heads keep perpetuating in the media. And worst of all, they act on the advice from these people. It's just as bad as taking advice from a random YouTuber.
Hold up, wait a minute.
A lot of people in the investment groups I belong to keep telling me, oh, this analyst has this target, and this analyst has this target, and this analyst says sell, and this one says buy. Why? Why are you listening to these people? You have no idea what their strategy is. You have no idea what their agenda is. You have no idea why they're pushing the stock. And in this video, I'm going to take a little look at some of those that I personally don't like. So it's not a broad spectrum, it's just the ones that I think, wow, they've really shown how bad advice can be. The whole point of this video is just to show you, please do your own due diligence. Do not trust other people in doing your work. Especially if you're going to risk your hard-earned money on it. You need to do your own due diligence. And I'm sorry, it's really not that hard. And if you still say that you don't have the time, you don't have the energy, you don't have the resources to research companies and find the ones to invest in, then please build a portfolio of ETFs and just let them be. Never ever ever listen to the hype, or never ever listen to the talking heads on MSNBC or CNBS or wherever you see them. So in this video, we're going to take a look at some of those analysts and what they have been pushing for stocks and companies, and let's just see what happened with those. One of the most outspoken is Jim Cramer from CNBS. Oh, or is it CNBC? No, CNBS. It's called The Mad Money Show. Jim Cramer has made his fair share of recommendation about stocks, and some of them were epic flops. His most memorable one is the famous call on Bear Stearns in March 11, 2008, just before the great financial crash. On the show Mad Money, a viewer asked if he should be worried about Bear Stearns, and Cramer screams, "No, no, no, Bear Stearns is fine. Don't move your money from Bear. That's just being silly." Huh.
Bear Stearns is fine. Don't move your money from Bear. That's just being silly. Don't be silly.
A couple of days later, Bear Stearns went bankrupt. Yeah, bankrupt. But let's just look at that clip.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is really, look, if there's one takeaway other than the plus 400 somebody, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160.
It just goes to show you that either the so-called experts are wrong, or they have conflicting interests in what they're saying. And you don't know. You don't know what their agenda is.
A lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game.
Yeah, we definitely know that his priorities are not at the retail investors level. His priorities is with him and his own financials. He is definitely not with the average Joe retail investor. Truth be told, Jim Cramer has a better track record than a lot of the other so-called experts. 725 stock recommendations he made in 2021. 651 of those were buy, 74 were sell. For both sets, calculated the stock price change across 4 periods. The 1-day change, the 1-week change, the month change, and the price to date. One thing I noticed right from the start was the great performance in the 1-day price change, and I believe that's because Jim Cramer has a large following, and when he recommends something on the show, a lot of people actually buys it. The problem is they don't know what to do after that, and he seldom follows up on these stock picks, so they really don't know what to do with it. Do they keep it? Do they sell it? How long do they hold it? That's probably why the stock is being sold again rather quickly. So the short term is good, and after that the momentum is gone. And I also believe that there are some people on the other side of that trade actually counting on that it's going to happen, that the stock is going to be pushed up. That's why I never ever listen to the mainstream media or investing expert, as I never know what is their motivation. Did they really do the research? Or are they just regurgitating someone else's narrative? I never invest in something without digging out the info myself. I need to know the company and its future trajectory. So let's move on to some of the other ones. Some of those that I really don't like are the so-called shorts that were short on Tesla, short on Amazon, short on Apple. They're just shorting because they think they know better. So let's take a look at who those were. Let's start off with Jim Chanos.
How long have you been short Tesla?
So we've been shorted 4 years.
We are still basically maximum short Tesla. It's still one of my favorite positions.
I want to talk about one of your most famous calls, which is Tesla. You've been publicly short since fall of 2015.
He started his career as an analyst in several Wall Street firms, and eventually he went on to create his own fund called Kynikos, which is Greek for cynic, and his focus is in shorting companies. I don't know if he got lucky back when he shorted Enron, but he sure hit pay dirt with that one, and it certainly gave him street cred on Wall Street. Afterwards, he didn't do very good. He tried to short the Chinese housing market, failed a bit. He tried to short a couple of others, and some of them worked out. Luckin Coffee, for instance. Wirecard also. And then when he went on to Hertz, he was just too fast. So he covered his short position just before Hertz went belly up. Fun fact is, he still holds his short on Beyond Meat. The real story is that he has been a long time Tesla short, and his main objection was, no company can grow over 50% over a longer period. Really? Haven't you followed history, my friend? I guess not. And if something doesn't fit his narrative, his confirmation bias is looking for evidence to support this, and he could not see the facts. Let's hear it from the man himself.
We are still basically maximum short Tesla. It's still one of my favorite positions.
No, we're not max short, only because but we are still short. But there's now so many other things to do, including in the EV space, that we found lots of other things that are maybe even crazier than Tesla.
At the end of 2020, Chanos' assets under management fell to $405 million, obviously a sharp drop from his previous AUM of $7 billion.
How about the other Tesla bears, like Mark Spiegel or Gordon Johnson or some of all the other fools? Oh, I'm sorry, did I say that?
Mark Spiegel. He announced in 2013 that he was shorting Tesla stocks, and by 2018, he stated that he was short 7 figures of Tesla stock and put options through his fund, Stanfield Capital. It's difficult to imagine someone shorting Tesla for over 8 years, but that's exactly what Spiegel has done. One of the main reasons for his persistence is because his options on Tesla are constantly being confirmed by other Tesla short sellers.
So the name of this presentation is Tesla is still a zero. Now, I know Tesla longs think it's all about the future. And by the way, I'm sure there are 0 Tesla longs in this room because this is a short selling conference.
I've been short Tesla a hell of a lot longer than I ever thought I'd have to be short Tesla. We've been short it really since 2014 in reasonable size. And I put on a tiny position in 2013, but it wasn't meaningful. So yeah, we've been short Tesla, and it's hurt us because I had a lot of stocks that made a lot of money last year, but overall the fund was down a little bit last year, entirely due to the Tesla short.
There seems to be a trend for analysts to alter their recommendation to whatever the sentiment is at the moment. And when they talk about the consensus in the market, you just know they have no idea what they're talking about. And they're not really focusing on fundamentals. And if you skip the most important step and just focus on momentum and what the consensus in the market is, you are going to make some very bad decisions. As I said, the point of this video is just to please encourage you to do your own due diligence. Look into the companies. It doesn't take that long. Actually, an old quote from way back from Benjamin Franklin, where he said, "An investment in knowledge pays the best interest." Warren Buffett changed that a little bit to "the more you learn, the more you earn," but both is true. The more knowledge you get yourself by doing the work yourself, the better you will perform. Trust me, I've been there. Investing should be like watching paint dry or watching grass grow. It's not exciting. If you want excitement, take some money and go to Vegas. That's what I do with my speculative portfolio. On that note, I'll end this video. Remember to invest in you. The more you learn, the more you earn. If you found some value in this, I hope you will give this video a like. Maybe even subscribe to the channel and help me out a lot. Have a nice one. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the night inning. There ain't no point in resisting.